Hi everyone, welcome back to my channel. In this video, I'm going to talk about private student loan rates and how to find the best one for your situation. Private student loans are loans that you can get from banks, credit unions, or online lenders to pay for college costs that are not covered by federal loans, grants, or scholarships. Unlike federal loans, which have fixed interest rates set by the government, private loans have variable interest rates that depend on your credit score, income, and other factors. Private student loan rates can range from 1% to 13% or more, depending on a lender and your creditworthiness. That means you could end up paying a lot more or a lot less than the average federal loan rate of 3.73% for undergraduates and 5.28% for graduates in 2023-20,241. So how do you find the best private student loan rate for you? Here are some tips. Shop around. Don't settle for the first offer you get from your school or your bank. Compare rates and terms from multiple lenders online using websites like Bankrate2, NerdWallet3, or Forbes Advisor 4. You can also use their calculators to estimate your monthly payments and total interest costs based on different loan scenarios. Check your credit score. Your credit score is one of the main factors that lenders use to determine your interest rate. The higher your score, the lower your rate. You can check your credit score for free once a year from each of the three major credit bureaus: Equifax, Experian, and TransUnion. You can also use free services like Credit Karma or Credit Sesame to monitor your score regularly and get tips on how to improve it. Apply with a cosigner. If you have a low credit score or no credit history at all, you may not qualify for a private loan on your own, or you may get a very high rate. In that case, you can ask someone with good credit, like a parent or a relative, to co-sign your loan application. A co-signer agrees to share the responsibility of repaying the loan if you can't. This can help you get approved and lower your interest rate, but it also puts your co-signer's credit and finances at risk if you default on a loan. Choose a shorter repayment term. Most private lenders offer repayment terms ranging from 5 to 20 years or more. The longer your term, the lower your monthly payment, but the higher your total interest cost. The shorter your term, the higher your monthly payment, but the lower your total interest cost. If you can afford it, choose a shorter term to save money on interest and pay off your debt faster. Consider refinancing. If you already have private student loans and you want to lower your interest rate or change your repayment terms, you can apply for refinancing with a new lender. Refinancing means taking out a new loan to pay off your old ones. You may qualify for a better rate if your credit score has improved since you first borrowed or if market conditions have changed. However, refinancing may also come with fees and risks, such as losing any benefits or protections from your original lender. These are some of the ways you can find the best private student loan rate for you. Remember that private student loans should be used as a last resort after exhausting all other sources of financial aid, such as federal loans, grants, scholarships, and work-study programs. Private student loans are not eligible for federal forgiveness programs or income-driven repayment plans, and they may have fewer options for deferment or forbearance if you face financial hardship. Before taking out any student loan, make sure you understand how much you need to borrow, how much you will have to repay, and what options you have if you can't afford your payments. I hope this video was helpful and informative. If you liked it, please give it a thumbs up and subscribe to my channel for more videos on student loans and personal finance. Thanks for watching, and I'll see you in the next one.